Jason, let's put everything into perspective a little bit now in terms of what all of this means for the markets. Because, of course, with COVID, we had so much volatility. Then we had a supply of money from central bankers around the world, as well as governments. And therefore, we've got inflation. And now we're worried about the U.S. Federal Reserve raising rates too fast, not enough, et cetera. Where does this place you, Director of Research, as it relates to the market outlook and then the healthcare stocks we'll get into?
Yeah, it's really important. And as much as I love to talk about the science in a specific company, I need to understand the environment in which we're operating in. One of the things that's very clear is that COVID had a huge economic impact, a global economic impact, supply chain disruption. A lot of businesses closed, a lot of people didn't spend. Then, as COVID abated, a lot of people came out and did spend. And that combination certainly triggered rising prices, i.e., inflation. And we know that when there's a lot of inflation, the Fed raises rates. I was just looking at the yield on Treasury bills. You're getting 5% and higher on Treasury bills. So that's a risk-free. That's a very high number. And the reality is when the yields on Treasuries rise, that's draining that's draining capital from the equities market. And we've been feeling the pressure in the equities market. Now, the good news is that I think the supply chain disruption is a temporary. I think COVID was a temporary. I think structurally, the fundamentals of the global economy remain strong with one caveat. And that is, who could have perceived the invasion of Ukraine by Russia and what looks like now the collaboration between China and Russia. And when we talk about COVID and we talk about did the virus originate from Wuhan, it clearly amps up geopolitical risk. So geopolitical risk is not good for the marketplace. On the other hand, if we project forward and we say that peace is achieved in the Ukraine, and I think it will be, because the alternative is not thinkable, right? I can't, the alternative would be, a tactical nuclear weapon is set off in the Ukraine. That's a disaster for the world. It's certainly not good for the markets. So let's assume that we reach either a stalemate or a peace in the Ukraine. I think that's a very significant positive for the market. And hopefully that comes this year. And hopefully that combined will signify the last of the rate increases. And I think it sets the stage for a really robust market rally. But between now and then, we've got to get through the next 6 months to a year. In this very tough market environment, there's also a dynamic happening in biotech. And that is companies have been still spending their capital. Innovation in healthcare comes from the microcap sector. We do see it occasionally from the large companies like a Pfizer and a Bristol Myers Squibb or a Gilead, but a lot of innovation comes from the microcap space. And those companies, a higher percentage than I've ever seen, are running with little to no capital. The terms for raising capital are getting tougher. And so, what happens is that tends to set the stage for M&A transactions. And I think as we start to see M&A transactions, the big, deep pocket, well-funded healthcare companies buying the little ones, that's another telltale sign that the market is getting ready to rebound, that we're at the end of this kind of, I'll call it the micro bearish segment of the marketplace. So I'm really looking for that to happen. And I'm wishful for a peaceful resolution in the Ukraine. And, I'm hopeful that China's saber rattling around Taiwan will kind of die down a little bit. I don't think the Chinese really want to invade Taiwan. I think Taiwan is all about semiconductors, and we're currently building semiconductor plants in the US. The strategic value of Taiwan is understood by the Chinese and understood by this country. But I think that it's a lot of saber rattling, and I'm hopeful that that doesn't happen. And so if we end up with peaceful resolution on those two fronts, the Ukraine and
Mm-hmm.
Taiwan, we see M&A, it sets the stage for a robust market rally ahead.
Okay. We're going to take a quick break. When we come back, we'll get a couple of the names that you might be watching very closely. We'll be right back.